day all. Ira Epstein of Linn Associates with your agriculture update for this Thursday, and this is the last trading day of February. It's February 28th, 2019, just after 3 p.m. Central Standard Time. Another down day in the grains, and finally, the beans are getting down to longer-term moving averages. We've been talking about it. They're not off the highs that much that they've recently made, but they've pulled down. The U.S. won a WTO trade case against China today, where they had accused China of subsidizing the farmers there with such funds that it made crops not competitive. And that's exactly what we won. Does it mean anything? I really don't know. You can see that the dollar rebounded a little bit today. Metal market's down, and the stock market, fairly ugly look going into the close. But this is what I was talking about. Here is that 18-week moving average of closes, and on a weekly chart you got to 897. That number's $9, and away you go. You went right to it, and you pretty well halted the decline in that zone. When we go to the May soybeans, not the Marches or anything, and as you look at how this market's coming down, we're coming back into this low area that we've been here before. So this should be an area that the market decides, is there more to this, or is this just a pullback at this point in time? In terms of a trend, the trend is down. You have lower highs and lower lows. That is bearish. The market also, as you can see, is under the 18-day moving average of closes and now underneath the 100-day moving average of closes. So we fought at that 100 for a while. Will this be one of these times where you get a little rebound and come back to it, or is it going to let go from here, what traders are going to ask? I'm inclined to think it's going to get some traction right here because it's down to the lower Bollinger Band, and so far these tests of the lower Bollinger Band have been met with the market within short form rebounding back off of that. So we'll see if that's the case, and we are oversold. So in summation, you have a market that's in a downtrend, lower highs, lower lows. The bias is down as you're under the 18-day average now and the 100, but you are in oversold territory approaching the lower Bollinger Band. In the meal market yesterday, you rallied up to the upper 18-day average of closes, fell, and right today, I mean, that's classic textbook stuff, right to the lower Bollinger Band again and held it. Again, an oversold market. You can see that the line in the sand, as I like to call that, the 18-day average, has done its job of holding this market on rallies. The market that is playing the crush spread more or less is the soy oil. Remember, when you crush the bean, you're either going to get oil or you're going to get the meal, and you get a husk of all that. So you've got the higher high, the lower low, oversold. I'm going to call this market just meandering around. It's really not been able to put up and hold into a trend upside or downside for any length of time. Corn looks terrible. The market has let go of the sideways action. The market knows it's going to get from beans probably another 3 to 5% more acreage planted this year. It's putting that into the pricing. You are oversold. You're now 3 days. Well, I take that back. Today's close, yeah, underneath the lower Bollinger Band. Let me just check. This day was, this is the one I wanted to know. We finished on that day at 376, and that was under the lower Bollinger Band. So you're going into your fourth day tomorrow where you could be under it, which gives the market a 2% chance of what? That it'll stay under it. The problem for traders is you came out of this sideways action, so this is a breakout to the downside, and the market is searching for value. We haven't had a hard rally yet for those that are long this market to start bailing. I had heard that there was a lot of traders in the March corn, and that those that had rolled, they're not doing the rolls. Our firm handles a lot of commercial business, and traders are just fed up. They're not trying to stay onto the long side. I found that fascinating. Wheat's the same story. As we look here, you've got the embedded reading. You came out of what I tell you, this sideways action. And you'll hear me say this so often. When you get these patterns, you want to keep your eye and you're doing your job to try to catch a trend out of that. It's not the easiest thing, but when you can, what happens is that power starts acting, and look at that. Gets pretty exciting if you can catch it. Not the easiest thing with the embedded reading. You're just locked into the bear trend. You're not getting a heck of a bounce on this market either. Now, a market that's trying to figure out of its sideways action what to do. It's not as classic as I like, but it's still sideways action. And that's because you tried the downside, you couldn't push it anywhere, you went back to the upside, Bollinger Bands, couldn't push them, and all of a sudden you're ending up with a pattern of lower highs, lower lows under both key moving averages and momentum pointing down and nowhere near oversold. If the market wants to grab downside traction, I would think the 1234 area might be the support. The resistance is in two layers, the 18 and the 100-day average, and you could set a bear trap here by taking out today's highs because you have an outside day down. My theory is if you take out the high of an outside day down in the next two trading sessions, price often likes to move to the closest moving average, which would not be here. It's above, got to be above the market or the Bollinger Band. So that could be the trap if the market goes there. Right now, who's got control? The bears. Swing line down, bias down since you're under the 18-day average, momentum pointing down. Coffee market. Coffee market today, I was watching it rallied up to the 3-day average of highs where it ran into a lot of resistance. It still has the embedded reading. If the market, because it closed near the higher part of the day, if it jumps tomorrow, it'll be interesting to see if the red line stays embedded. In the cocoa, you join the bear camp in this market now. Lower highs, lower lows. We had talked just yesterday. We had higher lows and lower highs. It resolved itself temporarily by making the lower lows. So now you're underneath these numbers. Momentum's pointing down. Downside target could be the 2218 level, the lower Bollinger Band. Cotton is looking for direction. It keeps coming back towards this 18-day average almost the past week and not going anywhere. It tries the downside, then it hits it, as you can see. It's over, it keeps hitting it. It's looking to see what next. The close today at 72.82 was right on the 18-day average of 72.82. I'm about as neutral as I can be. I'm going to give the nudge, if you will, to the bulls because you do have the higher lows and the higher high, and momentum, well, it's flat, a rough call. Cattle market, a bit of a correction coming in from the upper Bollinger Band. We've seen this, done this before. It keeps cranking out new highs, then pulls back ever so slowly. It is a market that is also in overbought territory. Can it embed? Both numbers today are over 80, not the day before. So the answer is just overbought, and I think some pros took some money off the table. I think the same thing went on in the feeders. You got up yesterday in between the upper Bollinger Band over the 100-day average and right back under it today. In the hog market, you've had a pattern of what we'll call a short covering rally, not the beginning of an uptrend, unfortunately. Higher lows, higher highs, but staying under that 18-day average of closes, you can see how momentum has been gradually climbing up. It is still in oversold territory. Anytime one of these numbers is under 30, I consider them still oversold. You know, one of the things that we do, and these markets are very right now interesting because of our talks with China, what's going to be there, are we going to get export business for a number of the grain markets that we've got? We cover that, and our staff does a great job of talking options, derivatives, hedge strategies, what the cash market people are doing, and especially if you get our platforms, you hear during the day as we're talking to our clients through the platforms what we're hearing about the different cash markets, when and where. So if you're a grain trader, this can certainly be right up your alley. How do you get a trial to it if you haven't had it before? Simple. Just give us a call. You can always go to our website and you'll see our carousel of free offers. And remember, when we give you a free offer, you can also get our phone application for free. It'll work on Google or Apple phones, iOS's. And what happens from there is you're able to get your quotes, our research, other areas. We have different levels of research, so we'll let you see everything at the beginning, and then we start pulling it back until you become a customer. I'm Ira Epstein. You have a good day. We'll talk to you tomorrow.